Yeah, hey guys, I think we are live now. Okay. Hey Samfam, welcome to the live audit question discussion. We're gonna start with CA Inter today, and first we'll go with simple chapter that is company audit. Okay, the explanation would be obviously in English, and if you wanted any kind of explanation for any particular point, it would be in Hindi or Telugu. Okay. Okay, first. Just give me a second. Yeah, okay. First, we'll discuss with the CA Inter RTP for the applicable November 2023 examinations because this was most applicable and most relevant for this attempt. And later on, we'll discuss the questions that were in our question bank, and question bank was available in Telegram channel. Go and download that. If you want, you could take a printout of it also. Okay, now we'll see the CA Inter RTP that's relevant for November 23 examinations. First question is provide provisions with regarding to the appointment of the auditors. Okay, we know this is so simple. First, audit of a government company and a non-government company. What are all the provisions? Okay, before starting the questions and discussing the questions, I wanted to just give a quick uh, how this session goes on. If you follow us on Instagram handle, you'll know that we actually watch for or we advocate for the process, not like remembering with mnemonics and all. If you have been in touch with us, okay, what's our approach in solving the questions were first identifying the questions. First you have to identify the questions, that is most important, from which chapter it is. Though this is say like you read by knowing the chapter, you see I have said that this is companies audit, and all the questions that I discuss should be from companies audit, but in examination it's from whole syllabus. First you have to identify from which chapter it is and what topic from that chapter it is. You have to identify the question and what the question is asking you to. Okay, and second thing is you have to remember the rules or provisions. You have to remember the provisions or rule. You see whether it be FR, whether it would be accounts, or whether it would be auditing law, everything have some rules to do. You see rules to solve, whether it be taxation, IDT, DT, anything it would be. There were some rules. Even audit also have some rules. They have some provisions on how they have to be done, some process, like say the things that with regards to the appointment of auditors. Appointment of auditors was more companies are was mostly like a law. All the law provisions were being discussed in the audit with because they were so relevant enough. So there were rules that the auditor or the company has to follow. We'll discuss those rules, and later on we have to analyze the situation. Rules were just normal rules, but you have to analyze how you have to apply that. This is a question contains a scenario which is very custom in nature. You have to also not give lame not give just restricted answers, just copy paste the rules or the provisions from the act. You have to apply to that scenario that was given in the question. So that application and all, in order to apply that, first you have to know what the scenario that was given in the question, how it is relevant, how rules this is relevant to the scenario and all. And the fourth step is you have to write at a speed. You have to write at a speed. All these three things I can do it with you. All these things like identifying the question, I can do it with you, and like remembering the rules and provisions. I can share all the tips and tricks to remember things, or I can give the backstory so that whenever this provision comes, you will remember the story and all. And analyzing the case scenario, I can do it with you in this live session. But writing at a speed, you have to practice that. Only this step you have to do that, and all the three things I'll do, and with all these four inputs you'll get marks. Yeah, mark is the output. Say it's like a production process. The more inputs, the more qualitative inputs you put, the more qualitative output you'll get. Okay, and with that kept in mind, we'll just discuss the RTP questions. Okay. First, in order to identify, what we have to identify, say provisions with regards to the appointment of auditors. It's actually a direct question. Okay, let's say what are they asking? They're asking provisions with regards to first auditor appointment of government audit company and a non-government company. Okay, what are the provisions that we learned from our company audit? See in the chart that we have seen, right? First auditor with in the point of view of company. Okay, you see, first auditor, he has to be appointed by board of directors. It's a non-government company. Within how many days? 30 days of registration of that company. If they fail to do so, then members should appoint in EGM. Okay, within 90 days. Okay, this is what you have to write. And if it's a government company, who has the authority to appoint the auditor? Not only first auditor, any auditor, C&AG has right to appoint, but within how many days? 60 days. If C&AG fails to do so, then board of directors within 30 days could appoint the subsequent auditor. And if board of directors also fail, members comes in place. Within 60 days they have to conduct EGM and then appoint the first auditor. And with regards to the subsequent auditor, in the first AGM, see, first auditor has to be appointed not in AGM. It has to be appointed, you see, AGM, annual general meeting. An year has to complete in order to a company to conduct a general meeting. So that's why here also, even if the board of directors fails, it is an EGM, that is extraordinary general meeting. It's not usual general meeting, annual general meeting. Okay, in the first AGM of company, subsequent auditor will be appointed, plus first auditor who was appointed, he will give his audit report. Okay, that's fine. And with regards to the other company, other than government company, members appoint in AGM, and he'll hold till 6th AGM. In the first AGM, he'll get appointed for 5 years, minimum period of 5 years of appointment. In the till conclusion of 6th AGM, he will be appointed as an auditor. And if it's a government company, who has right? C&AG has right. Within how many days? 180 days, right? AGM also mostly would be 180 days from the closure of financial year. The due date of AGM is September 30th, and here also 180 days, it more or less comes to the end of the September. Okay, and for a government company, there is no 5 years limit. Till conclusion of next AGM, he will be appointed. Okay, he will continue his office till then. That's it. These were the provisions with regards to the appointment of first auditor and subsequent auditor for a government company and a non-government company, which we really know. That's so easy. And as per section 143G of Companies Act, the auditor shall also include such other matters as prescribed in Rule 11. We'll see what are those matters. You see, that's also again a direct question. They're asking about the Rule 11, and then you have to write with regards to that. You see, Rule 11, that's also a repeated question. We'll see that in our question bank also. What does Rule 11 says? Rule 11 says that these are all the things that company has to disclose. That is with regards to the pending litigations and whether the company had made any provisions for any foreseeable losses that were there, and whether there was any delay in transferring amount to investor education production fund, and if management had any other say no funds have been advanced or loaned or invested, that is cash outflow. Yeah, outflow that is other than disclosed. And here also see the same thing, no funds have been received, cash flow was inflow, cash inflow. Okay, in name of any loans or advances or guarantees, anything. Because why the rule 11 was so much so concerned is there is a major frauds that might happening here, so much of personal interest might be happening there. You see all the pending litigations, investor education protection fund, and foreseeable losses. You see there was something that was happening that was unknown, right? So all the things have to be disclosed here. Okay, and whether the dividend has been declared, that was in compliance with section 123. As per 123, how the dividends have to be declared: from profits after providing depreciation, from profits of previous year after providing depreciation, any balances out there, and any state or central government grants. That's also they can provide dividend. These were all only the sources that dividend can be provided, whether that were they are complying or not. And the company has any accounting software for maintaining books of accounts, and whether the recording trail was there or not. Okay, audit trail is something like an entry was posted, and auditor could see how that entry was passing through the financial statements of the things, from starting from journal entry to balance sheet or P&L account, how that was going on. And now we'll see the other question with regards to the company's audit. Yeah, now they are talking about some Caro provisions here with regards to the Nidhi company and transaction with the related parties. We know that Nidhi company, we have to remember the Caro clauses, right? Caro clauses with respect to their dealing of that provisions. Nidhi companies is clause number 12. Yeah, this is an official gazette for Caro. Yeah, with regards to Nidhi companies, what are all the 3 points that Caro is expecting the auditor to give disclose information with regards to? That is net owned funds to the deposit ratios, and Nidhi companies were maintaining 10% of unencumbered term deposits or not, and whether there were any default in payment of interest on the deposits that were made. These all the 3 things that you have to report with regards to the Nidhi companies in clause number 12. And what's the other thing? What is the other one is? That is transaction with the related parties. That's again 13th one, right? All the transaction with related parties are in compliance with section 177 and 188 of Companies Act, and were applicable accounting standards. These were things that they have asked in the RTP. That's with regards to Nidhi companies and related parties. Nidhi companies 1:20 net owned funds ratio, net owned funds to deposits ratio, and 10% of unencumbered term deposits, and default in payment of interest. And with regards to section clause 13, that is related party transactions have to be as per section 177 and 188 and as per accounting standards. That's it. And I'll make a video on how to make how to remember the Caro clauses and all. I'll just make that in 2 ways. Like, say if you were like some mnemonic person and all, I have got in the previous attempt I have just given this right with regards to the story kind of thing. I have given to remember the Caro clauses. Or you were a person who were or remember things in a visual memory format, or you have a photogenic memory, then I will add on some other method also, and I will just give it in today or tomorrow. I'll just post a video on that. Okay, and we have completed our CA Inter RTP there, And now we'll move on to the question bank. Okay, MTP, as I said, I think I didn't find MTP, right? You see how, if you find any MTP, you just give it to me. You see, this is an ICA website, and I have clicked here, right? Intermediate final mock test paper 1 on September. You see, you're getting it here. I'm going nowhere that I could find a PDF for that. If you find a PDF for MTP, just DM me in the Instagram or post it in the Telegram channel. I will just discuss that also. Okay, and now we'll discuss the question bank here. Okay, we'll discuss all the question banks here, because company audit is a scoring chapter, right? So we'll discuss with that all questions. And first question is that an auditor purchased goods worth 5,01,500 on credit from a company being audited by him. Okay, you see, mostly you have to trigger, right? With regards to the qualifications of the auditor, the trigger point is, I'll give you the trigger points for all the questions. Okay, the company allowed him 1 month credit, which is normally allowed to all known consumers. Comment. You see, what are they trying to talk with you within the question is that with regards to the qualifications of the auditor, right? They have made some purchases on credit. You see, sales were of two types. One is cash sales and second one is credit sales. Okay, when cash sales, it is just with regards to the in point of view of qualifications of auditor, it's normal business transaction. Anybody could do at an arm's length price. As they have said, there's no arm's length price and all. We are thinking this 5,01,500 is itself an arm's length price. That's fine, but it's not a cash transaction here, but it's a credit transaction. Now this customer will turn into a trade receivable for that company, a debtor for that company. That is, this debtor owed to the company how much? 5,01,500 rupees. Though it is a sales transaction, this person, debtor, that is in the current scenario, the auditor had owed the company how much? Rupees 5,01,500 rupees. Okay, this is indebtedness. Though it turns to be, shows up like a sale transaction, but it's actually an indebtedness because it's a credit transaction. That's a credit sale. So what are the qualifications for the indebtedness? What is that limit? That is 5 lakhs, right? You see, again we'll go with regards to the qualifications and all. See the list. That is, yeah, indebtedness excess of 5 lakhs. Here it's excess of 5 lakhs, right? 5,01,500. Yes. So whether this auditor is eligible to be appointed as an auditor or no? No, he is not eligible to be appointed as an auditor because he indebted to the company more than 5 lakhs. Okay, we know the answer. We know how we have identified the question and what the question had asked us. But how to write the answer? First thing, we have to write the provisions with regards to that. First, we have to write what the question is asking. First, we have to write that the question is talking about the appointment, whether this auditor is eligible to be appointed in a company or not. See, and we have to write the provisions. As per section 141, a person shall be disqualified if he is indebted to the company for an amount exceeding 5 lakhs. That is, even if it's 5 lakhs, no problem, but it is more than 5 lakhs. So he is disqualified. See, again, the scenario here where an auditor purchased goods from the company audited by him, he is definitely indebted to the company outstanding amount. So he is disqualified for the amount. And though the auditor cannot argue that he is enjoying a normal credit period, you see, normal credit period is arm's length price, but it's actually indebtedness, right? Okay, allowed to the other customer, in fact, such as he has become indebted to the company and consequently he has deemed to have to vacate his office immediately. So disqualification occurs. Here this law is unwilling. He is disqualified. He attracted disqualification. So he has to vacate his office. Okay, that's first question, and now we'll move on to the second question, that is Ram and Hanuman Associates. Those were chartered accountants in practice, have appointed as statutory auditors of Krishna Limited. Okay, Krishna Limited, K Limited is a company, R and H were the CA firms, the auditors. And H, who is H? He's actually a partner who holds up to 100 equity shares of Shiva Limited, a subsidiary of Krishna Limited. See, with regards to the disqualifications, again, the person who is appointed as an auditor or its partner or relative shall not, obviously there was a exemption or some relaxation with regards to the relative, that is they may hold up to 1 lakh of face value, but Hanuman here is not relative, he is actually a partner in that firm, right? So there is no exemption or no relaxation to partners with regards to holding of any securities in what company, that is in this question, that is Krishna company. Subsidiary, that is Shiva company. You see, even subsidiary was there, right? See, even if he holds shares in the subsidiary of Krishna Limited company, he is ineligible. Okay, so they were disqualified to be appointed as auditors. See how the question was there. You see, as per section 141, you see, you need not remember all these subsections and all. Remember section 141, it is for the eligibility of the auditor to be appointed as or to be appointed for that company as an auditor. Okay, a person shall not be eligible for appointment of the company who or his relative or partner, that is that person or relative or partner holding any security, but relaxation was given only to the relative but not for the partner. You see, you have given the provisions. Okay, now you have to apply to the scenario in the question. You see here, a person who is appointed incurs disqualification, that he shall vacate his office as such auditor, and such vacation shall be deemed to be a casual vacancy. You see here, the partner of this company, this chartered accountant firms which was appointed as an auditor, holds 100 equity shares, which is a subsidiary of that company, would attract disqualification, so he has to vacate his office immediately. So there would not be see, this company, this CA firms would be disqualified to be appointed as statutory auditors of that company. Okay, and now we'll see the second question, that is similar to this. MD of some company, P Limited, himself appoints Sri Ganapati, a practicing chartered accountant, as first auditor of the company. Okay, who has to appoint first auditor of the company? Board of directors has to appoint. You see, board of directors contains whom? Managing director, independent director, whole-time director, anybody, all the things. But board of directors contains a lot more directors, but here who appointed? Managing director had appointed the auditor. Could he appoint that? So no, only board of directors has to appoint. You see, provisions as per section 139, the first auditor has to be appointed within 30 days by board of directors from date of registration. Here again, after the provisions, what we have to write? We have to discuss the provisions, that is, you have to apply to the scenario that was given in the questions. Here Sri Ganapati, who is the auditor, was appointed by whom? Board of directors? No, managing director by himself. Was this violation to Companies Act? Yes, it's a violation. Actually, board of directors has to appoint. Board of directors includes managing director, but managing director, he himself cannot appoint. Okay, board of directors contains managing directors, independent directors, so on. Okay, all types of directors, which authorizes board of directors to appoint. And in the view, managing director should be advised not to appoint the first auditor. Okay, that's it. We have completed our second question also. Now, under what circumstances the retiring auditor cannot be reappointed? Actually, who is retiring auditor? Okay, if it's a first auditor, in first AGM, what he'll be? Since he's a first auditor, after in first AGM he'll be retiring auditor because he'll give audit report. For subsequent auditors, say like it's not a government company, it is other than government company, subsequent auditor, who is he? If it's an individual, for 5 years, after 5 years in the 7th AGM of the company and 6th AGM of the company, he would be retiring auditor, right? If it's a firm, it might also be a retiring auditor, but there's a chance that 2 consecutive 5 terms he might be reappointed. Okay, but see here, this firm who is eligible to be reappointed will not be reappointed when, you see, why individual is cannot be reappointed because 5 years has been elapsed, so law was unwilling, because there's a not as per law, the appointment of retiring auditors was not as per law, but here it's as per law. Okay, now I think you understood what is retiring auditor. Now we'll see under what circumstances that retiring auditor cannot be reappointed. What we thought of while discussing the company's audit from 3 point of view, that is as per law point of view, that the retiring auditor might had done some disqualifications, or he need to vacate his office immediately, that is law is unwilling. With point of view of auditor is itself unwilling, auditor don't want to continue with the company, and company's unwillingness, that company had made a special resolution in the board and a resolution had been passed in the AGM that this retiring auditor will not be reappointed, or a resolution had been passed that some other auditor will be appointed as an auditor. We'll see in from point of view of all these 3. Okay, first, as per law, the auditor proposed to be reappointed do not possess any qualification under section 141. 141 is eligibility, and the proposed auditor suffers from disqualifications, that is any kind of disqualifications. So these 2 were from point of view of law. Okay, from point of view of company, a special resolution has been passed not to reappoint the retiring auditor with regards to company. Okay, and a resolution has been passed in AGM for appointing somebody else, or providely expressing that retiring auditor shall not be reappointed. Again, company unwillingness from company point of view, and now we'll see the auditor's unwillingness. Auditor giving a written certificate that the auditor has given a notice in writing about his unwillingness to reappoint. And with regards, this is again auditor's point of view, expressing his unwillingness. And again another point of view is that the proposed auditor who is there, he had not given any certificate. You see, what are the basic qualification? First thing is, in order to appoint, company has to obtain from auditor 2 things. One is his consent, and second thing is certificate. What does that certificate contain? Certificate contains that his appointment was as per law, and these were within the limits of that, and that he'll give list of proceedings against him, right, and all things. But the certificate he had not given, so then he will also not be appointed. Okay, these were the situations where retiring auditor will not be reappointed. With that said, we have completed our question number 3, and now we'll go with question number 4. Question number 4 is a direct question. You see here, ceiling number of audits in a company to be accepted by the auditor. we know each audited 20 audits except what? OPC, or whether it's a small company, or whether it's a private company whose paid up share capital is below 100 CR. If it touches 100 CR, then +1. Okay, so that's what they have said. Company must obtain a certificate for before appointment, as that certificate contains what all the proposed appointment was within the limits, right? And that companies were 20 companies other than OPC company, dormant companies or small companies, and private companies whose paid up share capital is less than 100 CR, and a person who is in full-time employment elsewhere is also not eligible to be appointed. Okay, now we'll see the second question, what they are discussing about: filling the casual vacancy of the auditor in respect of the company. Casual vacancy have to be filled within how many days? Within 30 days. Even if it's a government company or not government company. If it's a government company, C&AG has to fill the casual vacancy. If not, if it's not a government company, board of directors has to appoint, and within 3 months he has to get approval from the members in AGM. Okay, we'll see what have they written. Okay, yeah, casual vacancy other than a company whose accounts are subject to audit by C&AG, that is, they're talking about government company. Other than government company, they have to be filled by board of directors within 30 days, and such appointment shall be approved by the company within 3 months after recommendation of board. And in case a company which is a government company, it has to be filled by C&AG within 30 days, right? And if C&AG do not appoint, then board of directors can fill that vacancy in next 30 days. Okay, now we'll see the third question that was discussed here, that is, in joint audit, each auditor is responsible only for the work allotted to him. It's individual responsibility. Say what they are talking about. In joint audit, in respect of audit work, in joint audit, joint auditors were responsible for the divided work. But in joint audit, all auditors were jointly and severally responsible to few things. What are those things? First thing, work that is undivided. Work that is undivided, right? And you see, only one financial statements, only one audit report, right? So audit report, jointly and severally responsible, and all the things that were there in financial statements, those were also jointly and severally responsible. That's fine. And we'll see whether these points were there or not. For the work which is not divided, and examining the financial statements and presentation and disclosures of financial statement and audit report, whether it's complying with the requirements or not. And in financial statements, for any matters that were brought to notice for other joint auditors and decisions that were taken by joint auditors, they were jointly and severally responsible for these matters. Okay, now we'll see the fifth question, that is, ABC Limited is a company incorporated in India. It has branches within and outside India. Okay, explain who can be appointed as an auditor for these branches within and outside India. Okay, for branches, either statutory auditor or the auditor of the company might go and audit. And for outside India, who has to be appointed is equivalent degree, like CPA, right, for other branch auditors. And that branch auditor has to communicate to this company auditor with regards to any kind of frauds that had been happening and all. We'll see. Now they are talking about the branch auditor provisions. See, where a company has a branch office, the account of that office shall be audited either by the auditor appointed by the company, as we said, or any other person qualified for appointment. And if it's outside India, then the company shall be audited either by company's auditor or accountant or other person duly qualified for that branch office as per laws of that country, right? There's an option that this company auditor can also audit that branch, but for outside entities, for outside laws and regulations, equivalent degree, that is a person who is duly qualified in as per the laws of that country has to be appointed as auditor for that. Okay, it may be noted that branch auditor shall report a report on the accounts of branch, and he has to send that report to the auditor of the company, that's the company head office auditor, statutory auditor, and he also report any kind of frauds that he encountered with regards to that branch auditors, right? You see, you need not copy paste in examination all the same things. You see the things that we are discussing here, right? You actually, the key for the examiners that was given was so much so liberal, but what the things is, only keywords have to be included, right? You need not just copy paste all the terminology, is and buts. You need not do that. See, similar relevant things were mostly enough. You see, if at all so that you ICA expects you to just copy paste the same things that it does, why it will give new questions, new scenarios, and ask you to analyze and give reasonable conclusions? Because I see what it wants is that it wants to apply you the provisions with that current scenario, the new scenario that I say have given in the examination. So you see, the key what was there would be more liberal. So just with regards to the provisions, and you could easily, and if you could easily apply that provisions to the scenario that was given in the question, you could easily score reasonable marks. At least 3 marks for a 4 question is decent enough, right? Yes, if it's a direct question, you could score and on of 4 and 4. Okay, now we'll discuss the 6th point. And first of all, don't be in a don't be in a hectic position that I have to just match pin to pin, right? Don't do that. Keywords are enough, the terminology is enough. You see, SCs were prepared by ICA so that auditors do audit as per SCs, auditing standards. Auditing has to be done as per auditing standards, right? You see, the same ICA is giving you the auditing pronouncements in order to you write in the examination. So remember, believe in ICA that the terminology that they use in full length lectures, we have discussed why this terminology or why this word has been discussed there, but since it's not the right time to discuss each and every point, I'm just making you believe that, trust in ICA wordings, that it would be very helpful. You see, in laws we don't change the words, right? Because changing a word will lead to a drastic changes, right? So here also see, auditing pronouncements were also like law of how to do audit. Okay, just actually inculcate the terminology that was given by ICA, and you could get beautiful marks in audit, right? You need not by heart anything. You have to just know the backstory of why that word has been there. Okay, now we'll see the next question, that's 6th one. That is, before the commencement of audit, joint auditor should discuss and develop an audit plan. Okay, they have come to the stage of audit plan. What they have already have done, they have done preliminary engagement activities, right? After preliminary engagement activities only, they will come to do the audit plan. Preliminary engagement activities and understanding the entity and all as per 200 series and all. After that, they will do audit plan, right? Okay, in developing the audit plan, the auditor should identify division of audit areas and common audit areas. Explain stating the relevant considerations in regard. Okay, audit plan considerations. What are audit plan consideration? Whether it be joint or any other audit plan. Say it's audit plan. What we have learned in considerations of audit plan, it get influenced on the previous things, right? Since it had done preliminary engagement activities, they will consider the preliminary engagement activities there. Okay, they have done 200 series things. They have understood the entity and they have identified the risk and all, and they will divert the engagement. They will choose the engagement team and all audit experts and all these will have a shadow on the audit plan. Okay, now we'll see preliminary engagement activities were done and nature, timing and extent to accomplish the engagement 200 series. And audit engagement team meetings, that is like say in team meetings what do? They direct the engagement team efforts to what significant matters to identify where's that, yeah, matters that are significant here. They consider in meetings what do? They consider and communicate the significant matters, and then they divert the team efforts to that significant matters. This is all in 200 series, right? Okay, and what do? After all this audit, they'll give audit report, and they will consider the reporting objectives also, and they'll identify the audit areas and common audit areas that was given in the question. This is how simple you could just derive things. You need not by heart the things again and again, but from the things that which you have already learned, you could derive the answers from that. Okay, the sixth one we have successfully completed, and now we'll discuss the seventh question, that is board of directors of MN Limited wants to appoint Mr. CAB, a practicing chartered accountant, as internal auditor of the company, as they believe that they could not appoint any other person as an internal auditor other than practicing chartered accountant. Is that so? No, internal auditor could be any person. He could be an employee of the company, or some other outsider, or anybody who could fit into that position of that internal auditor. You see, if it's a like electricity company, it is better to appoint somebody who was very well known with that electricity industry rather than a CA in practice, right? So who is most eligible has to be appointed as an internal auditor. What we have to do, as per section 138 of Companies Act, internal auditor shall either be a CA or a cost accountant, or any such professional decided by board, as the electricity company which we have been taught, right? And the internal auditor may not be employee of the company. See, he may or may not be the employee, might be employee, no problem. Okay, or any other professional, no problem. CA, no problem. Cost accountant, no problem. Anybody could be. Okay, now we'll see question number 8, that is CANM would be who is rendering management consultancy services to L Limited, wants to accept offer letter for appointment as an auditor. Okay, you see, somebody who is giving management consultancy services, could he be auditor? No, because which section says that? Section 144. What are the okay, for the next financial year, discuss with regards to the provisions. As per section 144, he cannot be appointed as an auditor. What are 144 services? What is that? With regards to accounting and bookkeeping services, and with regards to investments, investment advisory services, investment banking services, and anything that's related to the financial information system, that is like accounts maintaining system like SAP, Oracle, likewise information system, financial information system. And outsourced financial services. What are outsourced financial services? Say it's like for a bank, it is like credit card recovery agents. That's outsourced financial services. Management services, internal auditor cannot be an auditor because self-review threats. And actuarial services and any other kind of services that were prescribed. Yeah, so these were the provisions. We have given the provisions. Now what we have to do, we have to compare it with the question. CANM is advised not to accept because he was giving a services, that is management consultancy services, that is in section 144. Persons who are giving section 144 services were disqualified under section 141. You see here, directly or indirectly render section 144 services were under negative list of the qualifications. Okay, so he has to not accept the engagement letter. And now we'll see the 9th question, that is why central government permission is required when the auditors are to be removed before expiry of their term, but the same is not needed when the auditors are engaged after the expiry of their time. There were two things. Okay. Removal before expiry, and it is not expiry after expiry. That is, after expiry you say it is like not reappointing retiring auditor. Okay, but before that removal, before expiry of that term, central government permission is required as per law. Why so? You see, this is just analyzing the law provision that was already there. They were not asking you something that was they haven't given you a scenario that what law says. They're saying that law was like this. Why you think law was like this? They're asking you to analyze why lawmaker had kept this central government approval to remove the auditor before his expiry. Why? What might be the reason? He wanted to you to analyze. Okay, first and foremost thing, before expiry of the term is something like an unusual situation, right? Whether auditor might be doing wrong or company might be doing wrong, or there is not so much of a good relation between the auditor, company auditor, and the company. So there might be either auditor was not as per company provisions, or might be either one was doing some wrong thing, right? So that's why central government approval is required, because that's a serious matter that was happening there. Okay, the permission of central government for removal of auditor under section 140. The removal of auditor before expiry of his term, that is before he has submitted his report, is a serious matter and might adversely affect his independence. You see, the company had made a fraud, and the company has intimated that intimidation threats, that is they were forcing the auditor, or like say they're showing a knife and say you don't have to give an unmodified opinion, you have to not report this fraud and all. That's actually affecting the independence of the auditor, right? So that's why it's a serious matter on the independence of the auditor. So that's why there might be a conflict of interest between the auditor in their own interest. In conflict of interest of shareholders may remove the auditor of their own interest, and the law has provided a safeguard so that central government may know the reasons for such action. So that's why there's the central government approval, so that there'll be a reason for that. And on the other hand, if the auditor has completed his term, it's not that serious matter, because it's their wish, it's company's wish and shareholders wish whether to reappoint or not, and it's auditor's willingness also. Since it's a removal, it's auditor willingness is there, but company don't want, so it's not that serious matter. So they wanted to they need not take prior permission of central government. But like say you have to communicate to the central government in form ADT3 or ADT2, since it's a removal, right? ADT2 you have to communicate to the central government with regards to that removal in either the case. Okay, and now we'll see section question number 10, that is the practice of appointing chartered accountants as joint auditors is quite widespread. Okay, they're talking about the joint auditors in big companies and all. Explain the advantages of the joint auditors. You see, joint audit advantages is actually a direct question. You might do that. I'll just read out the things. What are all the advantages of joint auditors? Is sharing of expertise is an advantage. Sharing of fees is a disadvantage. Okay, advantage of mutual consultation, that is two things like say two firms could work together and consult each other. Mostly in joint auditor, what happens is a big firm, like say a big 10 firm and a mediocre firm will just go for a joint audit, so that the expertise of that big 10 would be comes under this mediocre firm also, so that they could share the expertise, like gain knowledge from each other, valuable insights, and they could also network, and staff development cost would be low. So we'll see the advantages of mutual consultation: lower the workload, and for better quality of performance, improved service to the client, and displacement of auditor of the company taken over is takeover often obviated. in respect of multinational companies in MNCs, the work can be spread using the expertise of local firms which are in better position to deal with detailed workload and local laws and regulations, and lower staff development cost, lower cost to carry out the work, and a healthy competition towards a better performance. These were all the advantages with regards to joint audit. It's actually a direct question, you might get that. And according to the 11th question, according to the Companies Act 2013, the person appointed as an auditor of the company shall sign the auditor's report in accordance with relevant provisions of the order. Explain clearly the relevant provisions relating to signing of the report. You see, signing of the report, auditor's report, is the duty as well as the right of the auditor, right? Now we'll see as per section what the suggested answer is. What the act was saying, that as per section 145, a person appointed as an auditor shall sign the auditor's report, and the firm, including a limited, and if it's an individual, he could sign. If it's a firm, whether it's a firm or LLP, only the partner who is a CA has to sign the audit report. We have seen the same thing in the eligibility, right? Who has to sign the audit report? Where is this? Yeah, whether it's an LLP, then only the partners who are CAs has to sign on behalf of the firm, that is, they have to sign the audit report, right? Okay. It's taking a lot of time. Yeah, and that's it with regards to the duty to sign the audit report and all. And with regards any kind of if they have given any kind of qualifications, or they have given any kind of adverse report, like they have given a modified opinion, they have to give reasons for that also in the audit report. Okay, that's it with regards to the duty. With regards to the duty, who could sign? If it's an individual, he could sign. Whether it's a firm or a LLP, only the partners who are CAs have to be an engagement partner, have to sign the audit report. Okay, and if there were any modified opinion, they have to what do they do? They have to give the reasons for that. Okay, and now we'll see our next question, that is, the auditor shall make a report to the members of the company on accounts examined by him. Okay, explain with reference to the relevant provisions of the Companies Act. You see, auditor shall make a report. What report? Audit report. On what? Accounts. What the financial statements that have been done, or that have been examined by him. Okay, how the actually the audit report has to be, or how the audit has to be done. Audit has to be done as per accounting policies, auditing policies, and as per laws and regulation. Audit has to be done in that way. Wait, I'll show you here so that you could take a screenshot if needed. Yeah, first of all, there were two things that were there. What auditor will do? Auditor will do audit. Audit has to be done as per professional, legal, and regulatory, as per auditing standards. Professional is auditing standards, and since he does audit for financial statements, accounts, accounting standards or accounting policies also he has to check for. And legal and regulatory requirements, audit has to be done as per law, right? And has to be do financial statement. How this financial statement has to be? What is the objective of the auditor? That objective of the auditor is that financial statements have to have a true and fair view, whether they are having a true and fair view or not. See, we'll see whether these things were there in the answer sheet or not. Okay, auditor shall make a report to the members. Obviously, he will address to the shareholders of the company. Okay, that in general meeting, and the report shall taking into account of provisions of this act, the accounting or auditing standards and the act. Okay, and which are required to be included in the audit report, and provisions of any other legal acts, okay, in which the company was regulated under. Okay, and how the financial statements have to be? The financial statements have to have a true and fair view with regards to the statement of company's affairs for the end of the financial year, that is, they're talking about the balance sheet, and now here profit and loss account and cash flow statements, and such other matters as may be prescribed, that is presentation and disclosures or other equity statements of equity, etc. Okay, we have completed our 12th question also. Okay, we have to derive what we have to write from the question itself. Okay, and now we'll see the 13th question, that is role of audit committee. As I have said, not on apart from recommending the auditors to the board of directors, the audit committee has few other duties also. We'll see what are all the duties that the audit committee has. First thing, with regards to the auditor, what he'll do, what the audit committee will do, audit committee will recommend to the board, and they will recommend the remuneration also. They will recommend the appointment, and they will recommend the remuneration of the auditors. Which auditors? Both statutory auditors as well as internal auditors. Okay, what it will do with regards to the company's financial statements and all. First, all the huge things it will do, say like related party transactions, it will examine the related party transactions and any kind of say like any related party transactions and all with regards to individuals and subsidiaries, joint ventures, all the intercorporate loans between them. They will also give an approval for that. And these were the things that the audit committee will do, and we'll see whether these were the things that were there or not. Recommendation of for appointment, remuneration, and terms of appointment of the auditors of the company, and review and monitor the auditor's independence, performance, and effectiveness of the audit process. You see, after appointment, what do? They will also review and monitor the audit process also. Okay, whether it be internal or statutory auditors, we know that auditor usually go and have meetings with audit committee. Okay, mostly they'll communicate with them. And examining of financial statements and auditor reports also, and approval of any modifications of transaction of companies with related party transactions, and scrutiny of intercorporate loans, that is corporate peer-to-peer lending, one company lending to another company. Okay, and the valuation of undertakings was companies they were taking under, that is acquiring the companies. Okay, or assets of the company when they were necessary, they will look after the valuation, and they will evaluate the internal financial controls and risk management systems also. Okay, in companies audit, I think I have previously explained how risk management systems were, what are the risk management systems were, what are internal financial controls were in previous videos, right? So I'm not going in detail here. Okay, I know that you know what are internal financial controls and what are risk management systems. Yeah, I have discussed that. And monitoring the end use of funds that were raised in public offers or related matters. Okay, these were the, this is also again a direct question from the audit committee, right, with regards to the auditor's sum and with regards to the related parties and intercorporate loans. You see, there were 8 things that you might remember, 6 or how much you might remember that. Okay, wait a second. Yeah, and now we'll see our next question, that is question number 14. The auditor has to make inquiries on certain matters under section 143. Where we have seen this inquiry on certain matters? You see here, the duties of the auditors, I guess. Yes, right. In the duties of the auditors, in the duties of the auditors, the first duty is inquire on certain matters. Now we are going to discuss in detail what are those what are all those certain matters that auditor has to discuss. Okay, first thing, anything. Okay, what we have, so financial statements, we have assets, liabilities, right, and kind of assets. First we'll go what were there in assets. When assets having shares of securities, say what, like subsidiaries or joint ventures, right? If this company was not an investment or trading companies, they do not usually hold shares of a company, right? When a company which is not usually an investment or trading company, which holds shares in securities, right, but it sells less than the purchase price. If it's a normal immovable property, then no problem, because depreciation would be there and like a obsolete machinery would be there. No, we don't inquire much on that. But shares and securities, You see, this company, first of all, it's not an investing company, but it's holding shares. Okay, fine. But holding shares means what? Whether it should be a subsidiary, associate, joint venture, or it might be an undertaking. But why it is selling less than its purchase price? Whether it want to lower its profit to avoid tax, we have to check on that. Okay, since assets were there, we'll go with liability sides where these assets were secured, used as a collateral or pledged, and take secured loans. Okay, some loans were there. Whether these assets that were secured, that were kept under the obligation, and they have been secured collateral, whether these loans were taken, but whether they were prejudicial to the interest of the companies, or whether there were any personal gains of the management or board of directors, we have to check for that. Okay, again, loans have there, we have touched loans. Okay, now we'll discuss other types of loans where those are actually deposits from the outsiders. Say like it's a gold shop, and people, there were schemes were there, and people have come and invested few things. We all have that gold schemes, right? After paying of 12 months, they'll give this eligibility to purchase another kind of gold ornament after 1 year, right? Say like they have collected deposits from various peoples there, you see, but they have treated it as loans. Or the loans that were there have been known interest. These loans also we have to actually inquire on those matters. You see, these deposits were not shown as deposits, but they were showing it as loans, so that they could claim interest and lower the profit and then evade tax. Whether we have to check all the things were there or not. Okay, enough with regards to the balance sheet. Now we'll see the P&L account. In P&L statement, whether there were any transaction that were prejudicial to the interest of the company, we have to check for that, whether there was there or not. And any kind of personal expenditures that were there. See, all these matters, if you look into further, if you look deeper, all these matters actually lower the profit and evade the tax, right? We'll see what all the matters, whether those were there here or not. First thing, it's with regards to the assets that we have been discussing, right? That the company which is not an investment company or a banking company have assets as shares, debentures, or other securities sold at price less than the purchase price of the company. You see, that's what we have discussed earlier, right? Okay, and as there were assets were there, by keeping these assets under encumbrance or pledge or collateral, they have taken some loans that were, whether they were properly secured or not, we have to check for the basis of that security, and whether they have been prejudicial to the interest of the company or its members, we have to check also that. Okay, we have taken loans, right? Now we'll discuss about the loans, whether loans or advances made by the company are shown as deposits. Okay, the company has lent some loans or advances to some other parties or some other firms or some other companies, whether these loans that the company had given to that parties were shown as deposits. Like, you see, this is actually a debt thing, right? Debt, but they are showing it as an equity things, right? Your deposits might be like for a tender deposits, anything kind of the things, right? Whether they're showing it as a deposits or not. Mostly interest-free loan scams all goes here, right? So when you show it as deposits, actually if a company gives loans to another entity, what it has to give in return? It has to get interest, right? It has to get interest. But when a company was giving interest-free loans to some other company, so they're showing it as a deposits instead of showing it as an interest-free interest-free loan, right? So if it's an interest-free loan, a lot of questions would be posed. So the company thought that it would better show it as deposit, so that nobody would ask us. So this is whether these transactions were there or not, we have to look after for that, right? and and after that, with regards to the P&L accounts and any transaction that were prejudicial to the interest of the company, or whether any kind of personal expenses that were there or not. And with regards to the equity in the balance sheet, the shares have been allotted for cash where cash is actually been received with respect to the allotment, or no cash have been actually received, right? This was something that was misleading, right? So these were all the matters that the auditor has to inquire on. Okay, now we'll see the next topic, next question. Okay, yeah, discuss the purpose of cost audit. Cost audit is again direct question, direct provisions. You could just copy paste what all the things that you have learned in this company's audit PDF, right? Yeah, cost audit, same thing, you have to write all the provisions. The question also was the same, right? What are the legal provisions with regards to applicability of the cost audit? We know that, right? See, the same thing, regulated sectors and non-regulated sectors and cost records, all the limits have been given the same thing, right? 50 cr, 25 cr, 100 cr, 35 cr. I have given it in a tabular format, they have just given it in a descriptive format. You could just present it in either way as you wish, right? I'm not discussing it any further because there was a lot of monetary limits that were happening, and monetary limits again I have discussed that in a separate video also. You could just go back for that or refer back, because discussing so much of numerics would be like it will drain the interest of you and me also, right? Okay, there's nothing much more to explain in monetary limits. I've skipped to question number 16. ABC Limited removed their statutory auditor before the expiry of the term by passing a resolution in the meeting of board of directors for their removal without obtaining prior approval of central government. In the previous question, what we have seen, that before expiry of the term, if at all our auditor was removed, they have to take prior approval of central government, because it's a serious matter. Auditor's independence might get affected. There might be a conflict of interest between auditor and shareholders, right? Has the company complied with the relevant provisions as per Act or not? No, they have not complied with the provisions as per Act. You think whether that was repeated or not? What in the previous question they have asked? They have, in previous question, what they have asked is why lawmaker had kept prior approval of central government only before expiry. They have asked you the reason, but here they were not asking you the reason for that. They are asking you that the law was like this. Okay, the company has done like this, but what the law says and whether they have done correct or not. Yeah, you have to apply the provisions to this scenario. In previous question they have not given the scenario. Okay, according to section 140, what do they have to? They have to take a special resolution of the board, and then they have to submit to the central government, right? Okay, after central government, within 60 days they have to form AGM, and they have to appoint another auditor, right? And you see, the application of central government for removal auditor shall be made in form ADT2 for the removal, and the application shall be made to the central government within 30 days from the special resolution that was passed by the board. After the approval was given by the central government, within 60 days they have to form AGM and take approval from the shareholders, and then remove the auditors. Before, you see, removal were two types. Before expiry, what you have to give? You have to give the auditor opportunity of being heard. After expiry, that is retiring auditor not being reappointed, then what you have to give? You have to give representation. So before expiry you have to give opportunity of being heard. See, what words you have to use? You have to use reasonable opportunity of being heard here. Yeah, where is this? Yeah, you have to give reasonable opportunity of being heard to the auditor. Okay, therefore whether the company had complied with the provisions? No, they have not complied, because they have not taken prior approval of central government in form ADT2. Okay, now we'll move on with second next question, that is discuss the reporting requirements as per Caro 2020 inventory clause 2. What are the things that in Caro as per clause 2 with regards to inventory have to be discussed? First thing, what the thing, physical verification, and how frequency of that, whether it reasonable intervals or not, and whether there were any discrepancies, you have to, whether they were properly dealt in books of accounts or not, you have to check for that. And second thing is they have taken any working capital limits excess of 5 years. You see, we are discussing about inventory and why they are asking about working capital limits. In working capital limits, you see, you have to submit, you have to calculate the drawing power. Though if you take this 5 cr is like sanction limit might be 5 cr, for every quarter drawing power will be calculated based upon the data you have, your stocks you have, and a percentage on that drawing power calculation. For that drawing power calculation, for the bank to give you that drawing power limit for that quarter, you have to submit the stock statements. Stock statements contain what? Details of inventories. That's why this was given in this inventory clause. If the sanction limit was 5 cr and more, what you have to do, you have to check whether the quarterly returns or statements, that the stock statements that were submitted to the bank were in agreement with the books of accounts or not. We have to check that. That's it with regards to the clause 2 of Caro 2020. And now we will discuss about clause 5, that is deposits accepted by company or the amount which are deemed to be deposits. This is actually, you have to just write what all you have remembered from clause 5, that if a company had accept deposits, it has to be in compliance with RBI Rule Act, that is as section 73 to 76 and all, whether that was applicable, and whether any kind of NCLT board, tribunal or RBI, whether all these orders have been there, whether they have complied with that or not. First thing, in clause 5, they have to comply with section 73 to 76 of RBI Act, whether they have complied that or not, or whether there were any orders of NCLT or RBI, whether they have complied to that orders of that NCLT or RBI or not. You have to just 2 points, that's it, again 2 points. And now we'll discuss the 18th question. A special video on Coro will be also there, don't worry if I just have been in a rush. Okay, so question number 18 is as per section 139 of Companies Act provides that every company shall at its first AGM appoint an auditor. You see, it's not first auditor, it's first AGM auditor. In first AGM, who will be appointed? Subsequent auditor will be appointed. So what all the provisions you have to write with regards to whether first auditor or first subsequent auditor? You have to write provisions with regards to the subsequent auditor. Subsequent auditor is the auditor has to be appointed in AGM, and all the points have to be written high. First, written consent of that and a certificate, and our certificate shall contain what all the things. The appointment is as per Act, the proposed appointment is as per Act, and he was not disqualified, and the proposed appointment was within the limits, and the list of proceedings were there. And if he is convicted, he will be directly disqualified from the date of conviction, 10 years, right? So proceedings were the things that an order was not there, an order was not being given. Okay, the company shall inform the auditor with regards to the appointment and to the auditor, plus register within 15 days from which the auditor has been appointed. Okay, these were the provisions with regards to appointment of subsequent auditor. And question number 19, under the provisions of 141 of Companies Act 2013, along with relevant rules, a person or a firm who has business relationship with a company is not eligible to be appointed as an auditor of that company. In this context, discuss the term of business relationship. You see, again, it's a direct question. It again comes from the disqualifications criteria. A company and a person who is having a business relationship with a company, if it's disqualified, directly disqualified. You see, these all the things that we have to write in that question. You see, commercial transaction as per CA Act was eligible, and any commercial transactions in ordinary course of business at arm's length price is also exception. Except these two, any other business relationship, the person is disqualified. Okay, yeah. Under the provisions of 141 of Companies Act, the term business relationship means commercial transaction as per CA Act and commercial transaction which has at arm's length price in the ordinary course of business. That's it, a direct question. And now we'll discuss our question number 20, that is discuss the reporting requirements with regards to statutory dues. Statutory dues number, I think clause number 7, right? Statutory dues was clause number 7. Okay, it was here, sorry, 7, and internal audit is 14. Okay, in clause number 7, what we have to write with regards to statutory dues? Undisputed, disputed. Undisputed, whether undisputed dues were paid or deposited regularly or not, you have to check for that. If not paid regularly, or you have to give details that arrears were more than 6 months, you have to give details of that not deposited one. If at all disputed amount of that disputed dues and at which forum that was being submitted to. Okay, whether the company is irregular in depositing undisputed statutory dues, that is, a company had accepted that statutory dues, and if not, for a period of, like say there were outstanding dues as on last date of financial year, that is from 31st March, 6 months, more than 6 month due date, that is the dues were not paid even till September close, then they have to indicate, they have to disclose in Caro report. And when statutory dues were at dispute, the amount that has been deposited and at which department that has been the dispute was there, you have to disclose that with regards to that. And with regards to internal auditor, whether the internal audit system was there, and with regards to the size and nature of the business, is that there or not, and the internal audit report have been considered by the statutory auditor or not. You have to check only these 2 points, that's it. And now we'll discuss question number 21, that is explain the meaning of internal financial controls as per Companies Act and also explain its objectives. You see, internal financial controls. Okay, now we'll see what the things that were there. Internal controls. In internal controls, we have subcategory of internal financial controls. In internal financial controls, we have internal controls over financial reporting. Okay, that's fine. What does internal controls means? Internal controls means that is company contains various departments, right? Inventory department, like accounts department, they have government approvals department, like compliance department, various kinds of departments were there, and administrative department. All these departments were, every department works under some rules and regulations. They have to follow some process, that after this they have to give approval, after this they have to give approval. All this process was there. This is with regards to whole operations of the company. That is what internal controls are. Okay, internal financial controls were concentrates only on accounting department, accounting, all the matters that was related to the financials. Okay, whenever there's money involved, those controls were internal financial controls. Like in books of accounts, we have some assets, liabilities, and we have some with regards to some financial statement, we might have been any frauds that might be happening, or any kind of accounting records, whether they were complete or not. All these things were there, and the financial statements that have been given, that whether the appropriate sign was there or not, and whether that have been submitted to SEBI or not. All these financial statements, everything that's related to financials, financial statements, accounts, accounting records comes under internal financial controls. What is internal controls over financial reporting? Say like the financial statements were prepared, but the managing director or the board of directors had refused to sign the financial statements. Okay, when the management hadn't taken the responsibility, they hadn't taken the responsibility in preparation of in like financial statements, they haven't approved the financial statement, would auditor would approve the audit engagement? Would he take the engagement, audit engagement? No, he will not take. Whether the shareholders believe that these financial statements were reliable? No, they will not believe. You see, internal controls that financial statements were reliable were those internal controls. You see, management signing the financial statements is an internal control which makes that financial statements are reliable. Any objectives or any activities that create a reliability on the financial statements would comes under the internal controls over financial reporting. Okay, I think I have given explanation with regards to the difference between internal controls, internal financial controls, and internal controls over financial reporting. Now we'll discuss what are internal financial controls with regards to this. Okay, this is obviously a definition. The policies and procedures adopted by company for orderly and effective conduct of business, of company policies, safeguarded assets, prevention and detection of frauds and errors, accuracy and completeness of accounting records, and timely preparation of reliable financial information. You see, all these things were with regards to financial statements and all. You see, this is internal controls over financial reporting. Why they have given internal controls over financial reporting in IFC? Because IFC also includes ICFR, that is internal controls over financial reporting. Okay, the same thing, this is the definition of internal financial controls, right? The same thing that they have given here in just point format. That's it. That's it with regards to the internal controls over financial reporting. Okay, and question number 22. Enumerate the circumstances under which the retiring auditor can be reappointed. Okay, till now we have seen that the retiring auditor will not be appointed and all, a special resolution will be taken, and his unwillingness, law unwillingness, company unwillingness, all this we have taken, right? So now we'll see the other way around, or the circumstances under which retiring auditor can be appointed. Same law point of view. Law is say no disqualifications were there as per law. Auditor is not disqualified, that's fine. Company is willing, no problem. You see, all the things have to be negative here. You see, not disqualified and not given company a notice of writing his unwillingness. Not unwillingness, that is he has been willing, the auditor is willing, and a special resolution not passed that the retiring auditor shall not be appointed. You see, two nots would get cancelled. No special resolution passed not to reappoint. So no circumstances. You see, where any AGM, no auditor is appointed and the existing auditor shall continue as the auditor. You see, all these three unwillingness they have included a not, and that's it. A retiring auditor will be appointed as auditor. And now we'll see the next question, that is give me a second. Don't worry, I'm just sharing the links in the social media handles, right? Okay, wait. And now we'll see our next question, that is question number 23. As per section 138 what? Internal audit. Only listed companies are required to appoint auditor. Okay, no, not right. There were a few threshold limits and all. That's applicability of internal controls, internal audit, right? There, it's actually a direct question. We'll see. Listed entities, unlisted, say like public companies listed, applicable. If it's unlisted, what, like paid up share capital 50 cr, turnover 200, outstanding loans and borrowings 100, deposits that were taken, that is 25. You see, if it touches 50 cr, or if it touches turnover touches 200 cr, or outstanding borrowings from any banks or financial institutions at any point of the year, financial year, touches 100 cr, or deposit that were taken touches 25 cr, internal audit provisions would be applicable. So internal auditor has to be appointed. You see here, unlisted public company, paid up share capital 50 cr or more, that is if 50 cr touches, if it touches 50 cr, internal audit applicable. Turnover touches 200 cr, internal audit applicable. Outstanding loans or borrowings at any point of the time 25 cr touches, applicable. Oh sorry, that is 100 cr touches, applicable. And the deposits that have been taken, outstanding deposits were 25 cr. If it touches, then that was internal audit applicable. And if it's a private company, only turnover and outstanding loans, turnover of 200 cr, if it touches, applicable. And if it's outstanding loans that were taken 100 cr, if it touches, internal audit would be applicable. It's just an applicability question. It's a direct question. Monetary limits, again, Jindabaz monetary limits. Yeah, again question number 24, I think it had got repeated again, right? Auto has to make inquiries on certain matters and all. I think we'll just skip that. Yeah, now we'll discuss question number 25, that is ABC and Company is an audit firm having 3 partners, A, B and C. Okay, they're holding appointment in 4, 6 and 10. Okay, A, B, C. A was holding already 4 companies, B was holding 6 companies, C was holding 10 companies. But as per Act, how many companies? Total individual, say it is an individual 20 companies. As per Act, 20 companies is their individual limit, and for the company as a whole it is 60 companies. Okay, provide the maximum number of audits remaining in the name of ABC and Company. Okay, ABC and Company firm collectively, or collectively 60 was the limit, but collectively how many already got exhausted? 6 plus 4, 10, 10 plus 10, 20, 20 already exhausted, so still 40 were left. Okay, second one is provide maximum number of audits remaining in the name of individual partners. See, out of 20, 4 were already exhausted, so how many? 16. Out of 20, 6 were exhausted, 14. Still 14 appointments B could accept. Out of 20, 10 were already exhausted by C, so remaining 10 C could accept, remaining 10 companies. Okay, can ABC Company accept appointment as an auditor in 60 private companies having paid up share capital less than 100 cr? Okay, if it touches 100 cr plus 1, if it's less than 100 cr, that those would be not included, so they could accept 60 private companies having paid up share capital less than 100 cr. Okay, 2 small companies were also excluded from the 20 threshold limits, they can accept. 1 dormant company, dormant company also exempted. Okay, would your answer be different if out of those 60 private companies, 45 are having paid up share capital of 110 cr each? Okay, it's touched 100 cr limit, that is plus 1, that is 45 plus 45. Could they accept plus 45 companies? No, because collectively they have only limit of 40 companies, so only 40 companies they could accept. The same thing that have been given here. Yeah, all this 60 companies and 20, and the limit was 40, and 16 more audits for A, 14 more audits for B, 10 more audits for C, and They can hold appointment in all 60 companies. Yes. And already having 20 companies, so how what they can also accept 40 companies. So in the given case, the 45 companies they cannot accept. What they can accept, they can accept only 40 private companies of 110 each. Okay, having paid up share capital 110 each. Okay, that's it. We have completed our question number 25 also. Now we'll discuss our question number 26. Okay. See, Amrit, an auditor was removed by K Limited before expiry of his term. You see, removal of auditor before expiry of his term. That is prior approval of central government has to be taken. First, board of directors has to obtain a special resolution. Then, within they have to take central government a prior approval in ADT2, and within 60 days what they have to do is AGM and shareholders approval also have to be taken. Discuss the procedure has to be taken by K Limited to appoint an auditor other than the retiring auditors. See, that's what we have discussed earlier. You see, before expiry of his term, what he has to appoint, he has to lay down the appointment of the auditor other than retiring auditor. They have to give a special notice. You see, appointing the retiring auditor is an ordinary business, so normal resolution. Appointing the auditor other than a retiring auditor, they have to take a special notice, business, so special notice. Okay, and the same notice have to also be given to the retiring auditor, and because it's before expiry of the term, wait, you see, I think there's a flaw in the question, right? See, before expiry, they have to give opportunity of being heard and all the provisions what we have said. Yeah, but after expiry, right? I think this is not right. We'll discuss that later, right? That's actually not the question that we have been looking for. Okay. Now we'll discuss question number 27, that is why central government permission is required when the auditors are removed before expiry but the same not needed. Again, it's a repeated question number 27. And now we'll see 28. 28 is again a Caro question, that is with regards to say like it's clause number 20, I guess. Yes, if I'm not wrong, it's clause number 20, the CSR activities with regards to that. As per clause number 20, there will be like ongoing projects, whether there have been any ongoing projects, and the things, we'll see the Caro 20 here, ongoing projects and the shortfall and all. But as per section, wait a second, yeah, as per Act, Companies Act, under section 135, 2% of profits has to be spent under CSR, right? Okay, to whether what all the disclosures that have to be given, this comes under schedule 3, not Caro 2020. Okay, in Caro 2020 there would be like ongoing projects and all, but this is under the Companies Act, right? Companies Act disclosure schedule 3. Okay, the amount that is required to be spent, that is say like 2%, that is as per Act, 2% of the net profit that have to be spent, and whether they have spent that, how much amount they have spent, whether there were any shortfall and reasons for that shortfall, and total previous year shortfall also have to be added, and the reasons for that shortfall, and the nature of CSR activities that have been they were going on, projects that they have been going on, and details of related party transactions with regards to any contribution to the trust and all these details have to be disclosed in schedule 3 as per section 135 Act of Companies Act also. Okay, sorry, I just thought that it's a clause, Caro clause, they were discussing that. This is why it's so important. Whenever we see like section 135, we might go for thing for a Caro 2020 or this one. So you have to go with since if it's a Caro 2020, they would have mentioned there, right? Since they have mentioned here it's Companies Act, so we have to give these all details. Okay, if they have given the same thing as say like Caro 2020, as per Caro 2020, we'll go to section number, sorry, clause 20. Yeah, whether there were any ongoing projects that were there, and they have transferred any unspent amount within 6 months, and whether there were any remaining unspent amount and all. This is how the solution has to be. Okay, and now we'll see the next question, that is question number 29. What are required disclosures for cash and cash equivalents? That is again schedule 3 things, and the cash and cash equivalents have to be disclosed as balances with banks, checks, drafts on hand, cash on hand, and others, and balances which were held as margin money. Margin money, it's like for any kind of shares or securities, that margin money is you put at the broker with regards to if you're doing a short, say you'll have to give some margin money to the broker so that any kind of fluctuations in the prices would be adjusted to that margin money. And repatriation restriction, repatriation is whenever any kind of forex transactions were involved, the company actually earns in forex, it has to repatriate into India. So all that repatriation balances that the company has to bring it to India, and the bank deposits having more than 12 months maturity shall be disclosed separately. Okay, these were the disclosures with regards to cash. And now we'll see question number 30, that is proceedings that have been initiated against the company ABC Limited for holding one-off property as Binomi party property under Binomi transactions. Okay, Binomi transactions, schedule 3. See here, schedule 3, disclosure requirements. You see details of that property and details of that beneficiaries and the amount that was involved, and if the property is in books of accounts, that property details, and if it's not in books of accounts, the fact that it shall be stated with the reasons, and whether any proceedings against the company, that proceedings also have to be given, and the nature of the proceedings also has to be disclosed in schedule 3 with regards to the beneficiary transactions. Okay, and now we'll discuss question number 31, that is XYZ Limited is engaged in the business of shoes having geographical presence across India. That is, they're talking about its MNC company. Okay, they use some poetic language. Following details are available as latest audited financial statements, that is their paid up share capital is 9.8 crore, turnover 98 crore, outstanding loan 25 crore. I think they might be asking about some applicability, we'll see. Liabilities on outstanding debentures 26 crore. You see both were the same, loans and debentures, right? Comment the applicability of audit committee 177 applicability. What's that? If it's a public company, under public company, if it's listed, applicable. If it is unlisted, then if paid up share capital 10 crore or more, if it touches 10 crore, applicable. And turnover 100 crore, if it touches 100 crore, audit committee has to be constituted. Its outstanding loans that taken from banks or debentures were 50 crore. If it touches 50 crore, then audit committee has to be they have to constitute audit committee. You see here, paid up share capital, it's less than 10 crore. 10 crore didn't touch. Turnover, it didn't touch 100 crore. So, and now we'll see the loans. 25 plus 26, that is 51 crore loans, outstanding loans. It touched 50 crore. So audit committee has to be constituted since it satisfied the condition that the loans that it had taken touched 50 crore, right? You see the same here. Therefore, the provisions relating to the audit committee will be applicable to XYZ Limited as the aggregate of loans that were taken exceeding the prescribed limit of 50 crore. Okay, this is how you have to write. First you have to write the provisions, and then you have to apply those provisions to the scenario that was given in the question. Okay, now we'll see the next question, that is question 32, that is as per section 147 of Companies Act prescribes punishments and contraventions. You see, I'm not discussing this. This is penalties, right? I need not explain anything with regards to that. You could just read it from the monetary limits chart that was there in our Telegram channel. Okay, now we'll see next question, that is question number 33, that is matters that need to be included in the audit report as per CARO 2020 regarding the default in repayment of loans or borrowings to a financial institution. You see, company had defaulted a loan repayment. Okay, what is that clause number? Clause number 9, that is defaulting. Okay, first, what all the points that were there in CARO? First, whether the company had defaulted or not. Okay, whether company had defaulted, if yes, the period and amount. Okay, whether the bank has declared the company as a willful defaulter. Okay, you have to give answer to that, whether if it's yes, yes, if not, no. Okay, whether the term loans applied for the same purpose or not, and the short term loans were used for long term purposes or not. You have to check for those with regards to purposes. Okay, whether the company has taken any funds from any entity to meet obligations of subsidiaries, associates or joint ventures. You see, the company had taken loan not to meet its own obligations, to meet the obligations of subsidiaries, associates or joint ventures. You have to check whether they have taken for that or not. They have raised loans under the pledge of securities that were pledge of securities of subsidiaries or joint ventures or associates, whether you have to check that first, so whether they have pledged such securities or not. These were the disclosures under CARO 2020. First one, what? Whether the company had defaulted or not. If defaulted, the period and amount of such default, and whether the bank has declared the company as a willful defaulter, yes or no. And now we are talking about the purpose. Okay, whether the term loans have been applied for the same purpose for which it had been taken, whether the short term was utilized for long term purposes. That's why the future economic benefits were not being able to generate, so that they could repay the short term basis. You see, the cycle would be longer for a long term purposes, right? Whether is that the reason why they are not repaying the loan. Okay. D, whether the company had taken funds to meet the obligations of subsidiaries, associate, joint ventures. That's why the company did not generate any kind of money out of that spent loan amount. Is that the reason why? And the next point is whether the company had raised loans by pledging the securities. See, if they have not repaid, whether the bank might take the securities with them, so that we might lose the authority, we might lose a subsidiary. So we have to actually disclose these all the things in our CARO 2020. Okay, with regards to if at all a company defaults. Okay, and now we'll see our next question, that is question number 34. Under the provisions of section 143, auditor shall make a report to the members of the company on accounts examined by him. You see, this is what we have already discussed, right? See, this is again a repeated question. You see, report, audit report, it has to be as per professional and accounting standards, auditing standards, accounting standards, and as per laws. And financial statements, the accounts that were maintained, that need to have a true and fair view, balance sheet and P&L account and cash flow statement, the same thing which we have discussed earlier, right? But see, they were also asking about the rule 11. What does rule 11 is? Rule 11 is what are few things: pending litigations, any foreseeable losses, or any kind of delay in transferring to investor education fund, whether the company has taken any undisclosed loans or received any had made any undisclosed loans or advances, or has received any undisclosed loans or advances. That is with regards to rule number 11, right? and that's it. And any kind of dividends which we have already discussed, right? And now we'll discuss question number 35, that is ABC company is an audit firm having partners A, B, C, and they have offered appointment, and D is the relative of A holding 25,000 shares of face value 10. Again, see, eligibility disqualification, 25,000 shares into face value of 10, that is 2,50,000, but the maximum limit is 1 lakh. In order to take corrective actions, the auditor has to take corrective actions within 60 days in order he not to get disqualified. So that relative have to, he had to sell his shares on what. So that's what we have to write in the question, right? So we have to write the provision so that the maximum limit is 1 lakh and that is 2.5 lakhs. So he is disqualified. And you might also give a remedial actions if they ask that. So okay, corrective measures. That's it with regards to that 35. And now we'll discuss 36, that is the C&AG. We'll discuss that in C&AG powers. They're asking about C&AG powers. We'll discuss in government audit. Okay, while discussing the government audit, we'll just discuss the powers of C&AG. Okay, now we'll see question number 37, that is S Private Limited has paid up share capital 49 CR and borrowings there were 99 CR. Okay, the firm P and company was appointed as statutory auditors of the company for one term of 5 consecutive years, no problem. Whether the provisions of rotation of auditors applicable or not. When does the rotation of auditors were applicable? Rotation of auditors applicable to both public as well as private company. Public, if it's listed, applicable, and if it's unlisted, if paid up share capitals were, if it touches 10 CR, then rotations applicable, and it's outstanding loans that had taken, that if it touches 50 CR, then rotation of auditors is applicable. Only these two things, rotation, no turnover is there. Okay, and if it's a private company, when paid up share capital, if it touches 50 CR, then rotation of auditors is applicable. Then outstanding borrowings that were, if it touches 50 CR, then rotation of auditors is applicable. Okay, now we'll see the provisions with regards to that. You see, all unlisted public companies having paid up share capital of 10 CR or more, that is if it touches 10 CR, rotation applicable. All private limited companies paid up share capital, if it touches 50 CR, paid up share capital applicable. And all the companies having public borrowings, that is 50 CR or more, you see, 50 CR or more, if it touches 50 CR, then rotation of auditors is applicable, and listed entities anyways it would be applicable. Okay, but it excludes OPC and small companies. Okay, fine. And okay, we'll see whether the rotation of auditors is applicable or not. We have discussed the provisions. Now we'll apply that to the scenario that was there in the question. You see, public share capital touched 49 CR, that is it touched 50 CR. Say it is a private company, right? For private company, paid up share capital limit is 50 CR. So 50 CR didn't touch, so rotation is not applicable as per paid up share capital. Now we'll see the borrowings. Borrowings for 99 CR. For borrowings also it is 50 CR only, right? 50 CR. So rotation of auditors is applicable since its borrowings were crossed or exceeded 50 CR. You see here, as private limited, paid up share capital is 49 CR, but borrowings were 99 CR. So exceeding the prescribed limit of 50 CR, so rotation of auditors is applicable. Okay, and question number 39, that is enumerate the circumstances under which retiring auditor can be reappointed. That's the same, that's again repeated, right? Point of view of law, point of view of auditor, point of view of companies. Okay, the same which we have been discussed earlier. And now we'll see question number 39, that is the procedure in selection and appointment of the auditors. Okay, see, whenever there is an audit committee that was there, audit committee will recommend to the board of directors. Board of directors then recommend to the shareholders in AGM. If audit committee was not there, board of directors will recommend to the shareholders. Okay, in this recommendation, audit committee, while recommending to the board of directors may agree or disagree. If they disagree, they have to give the reasons of such disagreement to the audit committee. Okay, audit committee, after considering these recommendations, they might select another auditor or leave that matter to the board of directors to appoint any other auditor. You see, only this reason, where when audit committee considers the reasons but gives an option for board of directors to appoint auditor, only then, even though the audit committee was present, board of directors can directly appoint the auditor. Okay, so these were the things. This is what they have written. In case of a company that is required to constitute an audit committee, where you see, the committee will take the consideration of qualification or experience of that auditor or propose the individual firm, or else the board will take into consideration of the qualifications or experience, okay, and all the professional matters and all. And the audit committee, board agrees to the recommendation to the audit committee, it shall further recommend to the members in the AGM, and if board disagrees, then that it will recommend to the committee for reconsideration, citing the reasons. Then if audit committee, after considering the reasons, decides not to reconsider its original recommendation of that previous auditor, then board might appoint, if board agrees, then board shall appoint the auditor. Okay, then the auditor appointed in AGM shall hold the office till the conclusion of the 6th AGM, that is 5 years, 5 consecutive years of appointment. Okay, this is what third point is just discussing about the name and all. That's what. Okay, that's a part of procedure. Okay, now we'll discuss the 40th question, question number 40. That is, at AGM of HB Private Limited, Mr. R was appointed as statutory auditors, however resigned after 3 months since he want to pursue his career in banking sector. See, casual vacancy. The board of directors had appointed Mr. L as statutory auditor in board meeting within 30 days. Okay, casual vacancy has to be filled by board of directors within 30 days. No problem in that. Comment on the matter with reference to the provisions of the act. You have to write the provisions of casual vacancy. You see, since it's other than a government company, board of directors have to fill the casual vacancy and within 30 days, and after 3 months after such appointment, he has to communicate in AGM to the shareholders. They have to ratify the appointment and what they have to ratify the appointment. You see, yeah, in general meeting within 3 months they shall ratify the appointment. Again, apply those provisions to the scenario here and then just write. That's it. Now we'll discuss question number 41, that is, explain the reporting requirements that auditor should ensure under CARO 2020 related to PPE and intangible assets. That is clause number 1. But I think the answer with regards to this is wrong. Now we'll discuss it in CARO 2020 here. Okay, yeah, clause number 1 that discusses about the PPE and intangible assets, whether the company is maintaining proper records of that PPE, whether the company is maintaining proper records of that intangible assets, and whether the physical inventories, that was PPE, that was been physically verified or not. See, physical verification was also there in inventories also. Okay, any material discrepancies, they have to be properly dealt in the books of accounts. And for any kind of immovable properties, whether title deeds were in the name of the company or if they were not in the name of the company, reasons for that. Since it's a benami transaction, so who held those names, whether they were promoter or relative, and the period that was held, and the reason for not being held in the name of the company. See, you are using funds of company to buy an asset, but the title deeds were in some other person's name. Reasons for that. Okay, and description of that property and the valuation of that property. Okay, as we have been discussing about the valuation, we'll see the revaluation here also. D, revalue, whether they have been revalued, and that one as per registered valuer, and the amount of change. If it's more than 10%, you have to also disclose that. whether there were any proceedings that have been initiated or pending because of those Binami transactions. You have to disclose that in the Karo report. Okay, and now we'll discuss the next question. Yeah, that is question number 42, that is provisions with regarding to appointment of auditors. You see, first auditor of a government company, non-government company, subsequent auditor or government company, the same thing which we have seen in while discussing the RTP. So I'm just skipping this question. Again, now we'll see question number 43. You see, A Limited had traded 50 lakhs in Tetra, a virtual currency, okay, during the financial year 21-22 and earned a profit of 20 lakhs on it. What is the disclosure requirement? Disclosure requirement, Schedule 3 requirement. Schedule 3, disclosures with regards to cryptocurrency and virtual currency. That is what you have to disclose. Any profit or loss with the transaction that you have taken, and the outstanding balance and the amount of currency that you have held as on the reporting date, and the deposits or advances that were made from any person for the purpose of trading in investing in cryptocurrencies. You have to disclose these 3 things. Okay, and now we'll see next question, that is question number 44, that is RJ Limited is in the business of trading of cycles, having head office at Delhi and branch at Mumbai. Statutory audit of head office was done by CAD and statutory audit of branch was done by CAM. Okay, during the course of audit by D at head office, D wanted to visit branch. D, who is D? The statutory auditor of the company who is doing head office, wanted to visit branch and verify the inventory records. Management did not allow CA to visit Mumbai office and verify the inventory records of branch audit in Mumbai, as it was already taken by CAM. Could they restrict the scope? No, they cannot restrict the scope. You see, in the engagement letter itself, what they have said, the management said unrestricted access to the books of accounts or the information, or unrestricted access to the persons or the places or information. But why are they restricting to go to branch for checking the inventory records there? So the management, what their management was thinking was, that's wrong, that's invalid, and discuss the rights available with the CAD. What are the rights that were available with the CAD? That's rights of auditor. What are the rights of auditors with regards to that? Okay, first we'll discuss in plainly that what are the rights of auditors. With regards to the engagement letter, what they have said, unrestricted access to books of accounts and information, right? That one thing. And with regards to the shareholders, in the point of view of shareholders, auditor has to write to give audit report. Audit report has to be addressed to the shareholders, where auditor could meet the shareholders in AGM. So auditor also has right to attend the AGM, and in order to attend he need to get a notice, right, for that AGM. He has right to get notice for that AGM. These were the rights. And obviously for remuneration, how could we skip remuneration? If there were any unpayment dues with regards to the auditor fees and what, he could exercise lien of books of accounts of the companies that were in his possession. He cannot go to the company and rob the books of accounts, but what are all the things that were in his possession, he could exercise lien on that. Okay. Now we'll see the answer with this. As per section 143, they have right to access books of accounts that were kept at register office or any other place. Or say they have right to access to books of accounts maintained at registered and head office and even with branch also. And you see, you might write the rights, whole rights, and then do that, or you could just elaborate like this, the only right, and then just apply to the scenario there. In the given case, C was appointed as statutory auditors. Again, see the provisions that you have are syncing it with the scenario that was there in the question, that is, which is very important. You see, they were saying that it's just same thing, management was restricting the statutory auditor in verifying the inventory records at Mumbai. Okay, keeping in view with the provisions, this is the conclusion that CAD has right to visit the branch for verifying the inventory records. Yes, right? If he requires to do so, he has right. So management contention was wrong. Now we'll discuss question number 45, that is explain the disclosure requirements of Ind AS in compliance with other equity. You see, other equity, what you have to disclose: opening balance, closing balance, restated opening balance, okay, any kind of changes in balance due to changes in accounting policies, okay, and any kind of say like dividends or any kind of transfers to reserves or any kind of comprehensive income, say like any comprehensive income that was there. These all things that have to be disclosed. We'll see. Opening balance, beginning, opening balance, you see, balance at the end report, closing balance, you see, restated balance at the beginning period. All the three things were done, right? And any changes due to changing accounting policies of previous year, okay, or any other change, or the things, these three things is something that you have to make a little bit effort to remember: comprehensive income, dividends, and transfer to retained earnings. Okay, these three things have to be disclosed in other equity for the companies that were following Ind AS. Okay, now we'll discuss question number 46, that is G Private Limited had fully paid up share capital plus reserves of 1. Cr. Paid up share capital plus reserves equal to 1.2 Cr. Okay, at the end of the financial reporting, and business was interrupted due to COVID. Therefore, the company incurred losses due to 25 lakhs. That is, its revenue is negative 25 lakhs. Okay. During the year, the company had borrowed 55 lakhs and from each bank and a financial institution independently. You see, borrowings 55 from a bank plus 55 from some financial institution. Totally, it's 1.1 Cr, right? It had a turnover of 850 lakhs other than revenue from discontinued operation. Total revenue includes discontinued operations revenue also. So a turnover was 850. Okay, now we'll see whether CARO is applicable or not. You see, CARO is applicable to, first of all, CARO is applicable to all companies including a foreign company except a private limited company which is not a subsidiary of holding of that particular company. You see, we'll see the criteria. CARO applicability criteria is if paid up share capital plus reserves, if it's 1 Cr. If it's more than 1 Cr, then it's CARO is applicable. If borrowings touches 1 Cr, then CARO is applicable. If total revenue touches 10 Cr, then CARO is applicable. You see, we'll see here. Paid up share capital plus reserves is paid up share capital plus reserves is 1.2 Cr, but it had got a losses. Previous year losses is 25 lakhs. So you have to reduce reserves. You have to negative reserves, negative P&L reserve. So 95 lakhs. It didn't touch, it did not exceed 1 Cr. So not applicable here. Okay, borrowings from a bank and financial institution 1.1 Cr, 55 lakhs each. It touched 1 Cr, so CARO is applicable here. Turnover including discontinued operation. Turnover also includes the discontinued operations. You see, if it touches 10 Cr, CARO is applicable. It's 11 Cr here. So it exceeding the limits, to borrowings and turnovers exceeding those limits. So CARO is applicable for that company. Okay. Now we'll see question number 47, that is P Limited is a company from a business group ABCD and engaged in trading of garments. The promoters of the companies are promoters and directors of some other group companies also. You have been appointed as auditor of P Limited and has entered into various intercompany transactions within the groups during the year which are outside the normal course of business. Okay. What will be the duties of the auditor in relation to those transactions? See, related party transactions, right? with regards to related party transaction, what the auditor has to, what are the duties with regards to related party transactions? He has to check the contracts and agreements with us, and he had to obtain audit evidence whether they have been properly authorized or approved by the audit committee or by the board of directors. You see, the business rationale, or whether there were any prejudicial interest to the interest of the company or the shareholders. You have to check for that, whether they were engaged in any fraudulent financial reporting, or they were doing any misappropriation of assets. You have to check that, and the transaction that have been, whether they have been appropriately accounted as per applicable financial reporting framework. You have to check for that. First you have to check the contracts and agreements, and you have to verify whether they have been properly authorized or approved. That is what the auditor has to check with regards to the related party transactions. Okay, now we'll see our next question, that is question number 48, that is proceedings that have been initiated again. Okay, this is again a Binami party transactions which we have already discussed, right? Okay, as per schedule 3, Binami transactions were these. And now we'll see, I think it's our last question, 49. Yeah, now we'll see our last question, that is CAG was appointed as auditor of R Limited at a remuneration of 35,000. He resigned after 7 months on health ground, casual vacancy. What is the responsibility of CAG as per section 140 and non-compliance of, you see, casual vacancy due to resignation? What the auditor has to do, if since it is a company that is other than a government company, he has to communicate to the company plus a registrar, inform ADT 3, since it is actually a resignation. So ADT 3 within how many days? 30 days. If not, so penalties for non-compliance, penalties, these were the penalties that they have given, and these are procedures that they have given. With that said, we have just completed all the questions in our audit question bank, and hope you have got a great time, and give me the feedback on how was the explanation, whether I have to go fast or whether I have to go slow, or whether I have to explain more with regards to the questions, or and that's it. Leave your feedback and share it with your friends. Thank you.